In 2026, one of the most valuable skills that you can build as an investor is not just finding deals, it's learning how to make better decisions. You know why? Because opportunities will always exist. There will always be another property, another market, another sponsor, another this is the one investment pitch. But a clear decision-making framework, that is much, much, much rarer. And for busy professionals, especially people with demanding careers, this is where it gets tricky. You may not have the hours every week to study the market reports, to compare debt structures or analyze every single investment opportunity that comes your way. You just might not have the time to do that. So what happens then? Right? You either delay everything because you feel like you don't know enough yet, or you rush into something because you don't want to miss another opportunity. And so you rush into something because you just don't have any other option. But both can be very, very dangerous. Waiting too long can keep your capital sitting idle, and we don't want that. But moving too fast can put your capital into a deal that you don't fully understand, and that is just as bad. That is why the goal is not to know everything. The goal is to have a process that helps you ask better questions before you make a decision. Ask better questions. Before every single investment, I like to come back to 4 questions. And they're easy questions, but they're very important. First, what is the objective? Am I investing for cash flow today? Am I investing for long-term appreciation, tax efficiency, wealth preservation, or legacy building? Because not every investment is designed to do the same thing. A deal that is great for long-term growth may not give you strong cash flow right now. And a deal that produces income today may not have the same upside over time. So before you ask, is this a good deal? You need to ask, is this the right deal for my objective? Secondly, what are the assumptions? Every investment has assumptions that are built into it. Rent growth, occupancy, exit cap rate, interest rates, renovation timelines, operating expenses. The question is, does the deal still make sense if things don't go perfectly? If the entire deal only works if interest rates drop, if expenses stay flat, if rent growth accelerates, and the market gets hot again, that is not a strategy. That's just hope. In 2026, disciplined investors need to understand what has to go right for a deal to work and what happens if the market moves slower than expected. Thirdly, who is the operator? In real estate, the property is the vehicle, but the operator is the driver. You can have a strong asset in a strong market, but if the operator does not understand the debt, the tenant base, the business plan, the local economy, and the risks, that deal can and will struggle. So I want to know, have they operated through different market cycles? Do they communicate very clearly? Are they conservative in their assumptions? Do they have a plan if the market does not move in their favor? That's the kind of operator you should be looking for, because in a neutral or uncertain market, execution matters more than hype. And the fourth, does this investment fit my life? This is the part that people often skip, investors skip. An investment can look good on paper and still be wrong for you. I know that's hard to understand. It may not fit your timeline. It may not fit your risk tolerance. It may not fit your liquidity needs. It may not align with what you're trying to build over the next 5, 10, or 20 years. That is why investing should never be about copying what someone else is doing. It should be about understanding your own goals very clearly enough to know that what deserves your yes and what deserves your no. Confident investors are not confident because they can predict the future. They are actually confident because they have a repeatable process every single time. A strong process, what does it do? It can help you slow down without getting stuck. It helps you to say no to deals that do not align with you. It helps you to avoid emotional decisions. And most importantly, it helps you protect your capital while positioning it for growth. In this market, your process is one of your greatest assets because the goal is not to chase every single opportunity. There's a time. The goal is to recognize the right one when it comes around. If you want to become a more educated and confident passive investor, join our investment community at www.phcinvest.com. You'll get access to educational webinars, investor playbooks, market insights, and resources that are designed to help you make smarter decisions before you deploy your hard-earned capital.